Hey guys, so today I'm going to be showing you how to hedge your portfolio against the market. So hedging means that you're pretty much offsetting any loss that you have with gains. So for example, if you place the call option on the S&P 500, which is SPY, and you also place a put option on SPY, the same expiry date, the same strike, you pretty much offset. You're not going to lose money either way, besides if there's a fee. Anyways, but this pretty much makes yourself like the same thing you would have if you had $0 in your portfolio invested and you were just all in cash. So this pretty much makes sure that you don't lose anything, but you're also going to limit your gains so you won't gain anything either. So I'm going to be showing you guys how to do this in this video. This is very key during the up and down market. If you feel unsafe, if you think there's going to be a very rough day up ahead, hedging your portfolio is an amazing thing you can do. So I'm going to show you a couple ways to hedge. I'm going to show you how to hedge your whole portfolio, how to just have upside even if the market downswings, and other stuff like that. So let's get into the video, and this is a huge tip. I really recommend you guys watch the whole video because this can really change and save you a ton of money in your investing future. Stay tuned till the end of the video because I'll be showing you how I hedge my portfolio and my favorite way to do it during this scary pandemic time with all the uncertainty in the market. Okay guys, this is the S&P 500. Ticker symbol SPY over the past year chart. So as you can see, it was pretty steady going up, and then we hit the volatility point. It was pretty steady going up. The pandemic scare happened, and boom, we're back down here. Low of 218. So the market bounced all the way back up to a high now of 320 or so. Today it's down slightly, but we're going to get into that in a second. So as you can see, on the market, it gets oversold, overbought, oversold by a lot. Oversold is the RSI, for those wondering. I can show you guys how to set this up on your Thinkorswim account in a future video as well. So let me know if you want to see that video. Leave it down in the comments below. But anyways, my point in showing you this is all the volatility in the market. Look how much selling there's going on. Look how much buying there's going on. This market is insane. So a smart thing to do in this instance is to hedge your portfolio. This protects you from any losses. I mean, it's going to limit your gains as well. But in a market like this, sometimes you got to conserve your portfolio by doing this, which is a scary thing to do. But it's something that's going to limit your risk and is a smart thing to do in my opinion. Okay guys, here's the SPY ETF. It pretty much just tracks the S&P 500, as you can see right there. So I'm going to be showing you guys how to hedge your portfolio if you're expecting a lot of volatility coming up. So what I would do if I wanted to have a big hedge on my portfolio, so currently I have like a 6,000 portfolio in this account. This is my Robinhood account. I do a lot of risky trading, so it would be smart for me to hedge. So in this instance, I would look at options, and then I would look at put options. So if I'm looking, for example, if I'm expecting some crazy volatility this week and going into next weekend, I would place a put option expiring June 15th. The reason for this is that would be next Monday. So in case there's bad news over the weekend that I'm expecting, in case there's bad news throughout the week, I get a full hedge on my portfolio. So what I would do here, I would just get a slightly in the money option, which would be right here. As you can see, it would cost essentially $351 per contract. $352. Currently, it's going up. But anyways, so this would hedge me perfectly. What I would do if I wanted a full hedge on my portfolio, I would make sure that it's 3,000 because this is about a 6,000 portfolio right now. It's going up every day, but whatever. So I would buy 8 or 9 contracts. So this gives me a full hedge on my portfolio and make sure I don't lose anything, and it just kind of makes me feel safe in case the market turns bad. So this is what I would do if I wanted to do a full hedge on my portfolio, but it's not my favorite thing to do. I'll get into my favorite thing to do at this market in the moment. So let's talk about what would affect the market and what would make the market go down. So there's a bunch of news about a second wave coming, a second wave of the Rona coming. So how do we stop this? That's a big question to ask. So the stay-at-home stocks, this is what's going to stop this. There's Peloton, There's Amazon is actually a pretty solid hedge. It's just a safe, amazing stock, honestly. Just Zoom, Slack, there's a bunch of these stocks that are super safe during this scary pandemic time. And the stay-at-home stocks are key during this time. So you gotta, every time you're hedging your portfolio against the market, you gotta think, what's gonna be stopping this? You can always play it safe with an SPY hedge, an SPY put, because that's gonna obviously bet on the market going down. So that means you make money when the market goes down, and even if your portfolio goes down, you're still making money as the market goes down. So it's kind of like you're just pretty much safe. Honestly, you're just pausing the stock market. You're saying, I don't want to invest right now. I want to be safe, but I don't want to sell out my whole. I don't want to be all in cash because I already have a full portfolio that I like long term. So that's a smart thing to do, to hedge your portfolio. But my favorite thing to do is buy the stay-at-home stocks right now. So to hedge my portfolio, I have bought a lot of shares of Peloton currently, ticker symbol PTON. This is my favorite stay-at-home stock. I actually like this long term. I think the next earnings are going to kill it. I've talked about this in a ton in past videos. So currently I have a pretty good sized position in Peloton. So what does this mean? This means if there's a second wave going, I already have my Peloton shares cut out for me. I already have my Peloton position cut out for me. So if there's the second wave comes up, Peloton's going to skyrocket once again. It could go up to 55, 60, and boom, I'm pretty safe. Even if the rest of my portfolio goes down, I still have that Peloton hedge. And the good thing with Peloton, it's not like a SPY put where the market will go up, the SPY will go up, and you'll lose money no matter what. No, Peloton has been going up as well. So Peloton's going to skyrocket if there's a second wave. Peloton's still going to be steady if there's not a second wave. So this is the perfect hedge at the time right now. This is how I'm hedging my portfolio right now. And this is just safe with crazy high upside as well. So if the market keeps going up, my hedge is not losing value. My hedge is still gaining value. Peloton is already up like 3% today. I know that the market is down, but this is still an amazing position. I do expect to double my money at some point in Peloton, and it's also a perfect hedge right now. So this is the best hedge I can offer you guys right now. This is the best advice I can offer you guys right now. Hedging your portfolio is something that all investors need to know how to do, and I would recommend you have a slight hedge at all times. So taking a look at Peloton, ticker symbol PTON, the one that I've said is the perfect hedge for your portfolio at this time. Look, it's already at 4.6% today, and the market's down. As you can see, like November, January, March, this was a very steady stock. So, and it also benefits greatly if there's a second wave. So looking at this, why would you buy a SPY put whenever you can just maximize your upside, maximize your potential, and lower downside risk at the same time, investing your money in Peloton, which is just the perfect hedge. So during all markets, there's not always going to be a pandemic like right now. So you got to find out the next perfect hedge. And if there's not a perfect hedge stock that you can find, I do recommend just doing SPY puts if there's a lot of volatility, if you're scared there's going to be a crash. It's just a lot of protection, and it's a great strategy to use as an investor. So I do highly recommend that you have a hedge on your portfolio during these crazy times, and especially one that maximizes upside. So using the Peloton example, the market goes up, Peloton stays steady, may drop a tiny bit, but the upside is still there. It could still go up when the market goes up. When the market goes down, Peloton's going to skyrocket once again. Like I said, I could see 55 or 60 price range if the market drops due to a second wave. Big news about second wave coming out. So thank you guys so much for watching. Check out the links in the description. If you want to join the private stock group, it's $4.99 a month to pretty much have you as my mentor. And I give you all my screenshots of every buy and sell I make. I give nightly watch lists, so great value. We're growing like crazy. We have about 250 members right now, and we're gaining every single day. Next, if you want to get 2 free stocks on Webull, if you want to get a free stock on Robinhood, I am affiliated with them because I do get a free stock if you guys sign up using my link, but that would be greatly appreciated. Please subscribe, please like the video, please share this with your friends. Anyways, thank you guys so much for watching. Thanks for all the support. Let's get rich.